Let us proceed ahead with the revision capsule on investment account. So I have prepared a simple mind map for it. So first some provisions of AS 13, and then we talk specifically about accounting for debt and accounting for equity. So investment is basically for earning either a periodical income through dividend in case of equity shares, interest in case of debt. So this is for equity, this is for debt, and rental is for real estate. But for a real estate, AS 13 uses a fancy name. It calls it as investment property. So investment is with the objective of earning periodical income through dividend, interest, or rental, or for capital appreciation. So there are certain investments which are not covered within AS 13, or there are certain aspects of investment accounting which are not covered. So when I talk about investment accounting, what do I really mean? Investment accounting basically involves various phases. What are the various phases? Let me explain here. So when I say investment accounting, I mean to account for acquisition of investment. Then I need to talk about recognition of income on investment. Then I need to talk about disposal of investment accounting. I also need to talk about carrying amount of investment for balance sheet purposes. So these are the multiple things which I need to talk. Out of this is covered in AS 13. This is income earned on investment is covered in AS 9. So recognition of interest or recognition of dividend and the rental is a revenue for a person, that is covered under AS 9. But in this chapter we are also going to talk about it. Operating and finance lease is excluded from AS 13 because it is covered in AS 19. Income from retirement benefit plan, that is a pension plan. So let's say LIC has created a pension plan whereby various companies contribute to that pension plan, and LIC guarantees a pension, that is covered in the books of LIC under accounting standard 15. Investments of life insurance corporations, that is covered by IRDA guidelines, that is not covered by AS 13. It is covered by IRDA guidelines. Mutual fund, venture capital funds, or banks and financial institutions, they are governed by RBI or SEBI guidelines. They are not covered by AS 13. Assets held as a stock in trade is covered by accounting standard 2, which deals with inventory valuation. So what we are going to talk in AS 13 is acquisition of investment, disposal of investment, carrying amount, and related disclosures obviously. So disclosures relating to investment, that is also covered in AS 13. So let me give you a AS 13 at a glance through a mind map. So this is AS 13 at glance. For the purpose of accounting, investments are classified into two parts. Current investment, which we call as short-term investment. The criteria for short-term investment is they should be readily realizable, that is they should be liquid. Now for example, when you invest in listed company shares, they are liquid because you get the money within 2 days of doing a transaction. Or when you invest in a mutual fund, you get the money in about 4 to 5 days from making an investment. So they are liquid. Readily realizable does not mean within few minutes or within few days. It should be liquid. You should be able to get the money quickly. There is no definition of quickly. And your intention should be to hold them for 1 year or less than 1 year. They are called as current investment. Anything which is intended to be held for longer period than that is called as a long term. But remember, after you purchase an investment, your intention may undergo the change. So long term may be converted into a short term, or a short term may be converted into a long term. So how do you show them in the balance sheet? That is a carrying amount. I'll come down to computation of cost. For a current investment, they are shown at lower of cost and fair value. Cost and fair value. I did not say NRV. So if there is a reduction in the fair value below the cost and any reversal thereof is recorded in the P&L. So I purchased the share at, let's say, 98 rupees per share. Its market value or a fair value went down to 68 per share in the year 2019-20 due to COVID-19 impact. So this loss of 30 rupees will be debited to P&L. But 20-21 is the year where the liquidity came in the market and the opening value will be 68, but the, let's say you sold it for, or closing value came out to, let us say, 105. So this difference will be recorded in the P&L, assuming that you have sold it. If you have not sold it, you will account reversal only up to previous cost. So if it is not sold and it is valued at 105, the entire difference will not go to the P&L. Reversal thereof, reversal of earlier 30 will be credited to P&L. So 68 plus 30, 98. 98 तक जो amount है वो मैं P&L को credit करूंगा. 98 के ऊपर जो 7 rupees है, that will not be recorded because it is an unrealized profit. So let's say in Q1 of 2020-21, 105 पे closing value चला गया, so 30 will be credited to P&L. So current investments are valued at lower of cost and a fair value. Long-term investments are generally valued at their cost. Decline other than temporary, that is a permanent decline, to be changed or to be charged to profit and loss account. There are indicators of permanent decline, like the investee company is suffering cash losses, its capital has been eroded, that investee company is facing going concern issues, its market share for the commodities or the goods that it sells has declined substantially, it is not able to obtain additional finance for doing a business. These are some of the indicators of permanent decline in the value of investee company. So if there is a decline other than temporary, it should be charged to profit and loss account. Decline can be reversed when the value of investment rises. Normally when there is a decline, we do not credit investment account, we pass an entry for the decline as under entry is P&L account debit to provision for diminution in the value of investment. Provision for diminution, decrease. Now sometimes the evidence of decline may be available to you after accounting year is over. My accounting year as an investor ends on 31st March. I had invested in some company. There was a decline on 31st March in the value of that company, but I came to know about decline in the month of May for that year. May 2021, I come to know about a decline which had already taken place on 31st March. If investor comes to know about decline, if investor comes to know about decline which has already taken place as on balance sheet date, decline as on balance sheet date, investor comes to know about decline as on balance sheet date after balance sheet date, but before finalizing his accounts, before finalizing his accounts, then apply AS4. AS4 talks about events occurring after balance sheet date. This is called as adjusting event. Decline in the value of investee company had already taken place on 31st March. Just that I came to know in the month of May, I should pass entry in the month of May, but the date of entry will be 31st March. I repeat, entry physically will be passed in the month of May because I come to know in the month of May, but The decline relates to the condition or situation existing as on balance sheet date. So decline will be recorded on balance sheet date only. So this current investment cost or fair value should be determined either on individual investment basis or by category, but not on overall basis. So you have equity shares, you have debentures of government bonds, you have investment in debentures of corporate bonds. ये category हो गया, equity shares, government bonds, corporate bonds. वो category by category आप कर सकते हो. Best is share by share, scrip by scrip, item by item. But total of all categories and total cost of all category and total fair value of all category, if you do like that, you are in violation of principle of AS 13. What is the cost of investment? In case you are paid the cash consideration, purchase price when actual cash has been paid shall be actual cash price that you paid, including all incidental charges. Including all incidental charges that you paid for acquisition of investment. So stamp duty, brokerage, securities transaction tax, stock exchange turnover fees, GST on that, all of that shall become part of your cost. But if you have done barter exchange, you have got an investment in exchange for something else, then right hand side applies. You issued the security and then you made an investment. You issued security of shares of your company and you got shares of some other company. Then you have to take a fair value of security issued by you. Cost of investment shall be fair value of security issued if you got in exchange of asset. Like you gave your asset and you took the investment. Investment will be accounted at fair value of asset given up or fair value of investment acquired, whichever is more clearly evident. What do you mean by clearly evident? Whichever is easily available in the market. Whichever is more traded in the market, easily available in market, usko consider करके आप cost of investment decide करो. Next, disposal of investment. Whenever you sell an investment, if you sell all of your investment, calculation of profit loss is very easy. You don't need first in first out or weighted average cost method because you have sold all investment. So ascertain the carrying amount. Carrying amount is a balance in the investment account at that point of time. Ascertain net disposal amount. Net disposal is after deducting brokerage and transaction cost. So B, if A is greater than the B, that is carrying amount is higher. Carrying amount is book value. If book value is higher than the sale value, you debit P&L. Charge difference to P&L. If A is equal to B, no action is required. A is lesser than the B, credit P&L. Charge matlab debit P&L. But if you sell investment partially, then you have to use either first in first out or weighted average cost method to ascertain the carrying amount. So under FIFO, investments made first shall be deemed to be sold first. Under weighted average cost, you should find out total cost as on that particular date divided by quantity as on that particular date before the sale transaction has taken place, and then you should find out profit or loss. So if there is a profit, credit P&L. If there is a loss, charge P&L. Reclassification, expect a question on this in the exam. So you can reclassify short-term investments to long-term. If you reclassify from short-term to long-term, transfer them at lower of cost and fair value. So cost or fair value, whichever is lower. Lower of this bracket, cost or fair value. If you are doing long-term to short-term, cost or book value, whichever is lower. Cost or book value, whichever is lower. At that amount you should transfer. Disclosure. What should you disclose as per AS 13? Whatever policy you adopted for determination of carrying amount. Like, are you determining the carrying amount on FIFO basis, or are you determining your carrying amount on weighted average basis? Income from interest, but gross income before deducting TDS. Gross is without TDS. Gross amount earned from interest, dividend, rental, separately for long-term and short-term investment. TDS on that gross amount should be shown separately. So आपको ये disclosures करने पड़ेंगे. TDS should be shown under the head advance tax paid by you. It's a taxes paid. Profit loss on disposal of investment along with their carrying amount. If you have made an investment in securities of some company which is in foreign country and there are restrictions on selling that investment, write about significant restrictions on ownership or realizability of investment or remittance of the amount or proceeds of disposal. Aggregate amount of quoted and unquoted. Quoted is listed and unquoted is unlisted. You should give the breakup out of total, how much is listed, how much is unlisted. Aggregate amount मतलब ये cost का breakup रहेगा. फिर आपको market value का भी breakup देना पड़ेगा only for quoted investment. For unquoted investment you have aggregate fair value rather than the market value. Word used should be here, fair value for unquoted investment. Any other disclosure required by some law, then you should give that particular disclosure. This is what AS 13 talks about. Then we come down to accounting for debt and equity investment, on which you should expect a numerical question. This first part was AS 13, on which you are going to get a descriptive question where you have to write provisions of AS 13. In any accounting standard, the bold italic portion in the bare text is the main provision. So you can revise either this mind map or you can read bold italic provisions for your reference. IC has given you one booklet called as Accounting Pronouncements. Within that you will find a bare text of the Accounting Standard 13. Within that there is a bold italic portion, some paragraphs. Those are key provisions of AS 13. So for a descriptive question, now whatever we are covering is relevant for numerical question. In case of a debt investments or debentures, when you acquire, the price that you pay for debenture can be either X interest price or can be cum interest price. X is excluding interest and cum is including interest. Transactions can happen at any point of time, but the interest payment by the company is only on the record date. So company says we will pay the interest on 30 June and 31st December only for first 6 months and the next 6 months. But transaction can happen at any point of time. Let's say transaction takes place on 31st August. So when a transaction takes place on 31st August, interest for July and August has already been accrued. So the buyer of debenture has to pay true price of debenture plus the accrued interest for 2 months. But accrued interest paid by him for the 2 months is not his cost. It is going to be reimbursed to him by the company on 31st of December. So we say true cost of debentures is what you paid for debentures and 2 months is accrued interest. So while doing accounting, I should debit investment account by true cost of debentures and interest account for accrued interest. So interest payment date is 30 June, transaction is 31st August, payment date is 31st of December. So price paid by the buyer will always be cum interest price, which includes true price of debenture and accrued interest of 2 months. This accrued interest will always be on face value. So you can do calculation in terms of months or you can do calculation in terms of dates. In exam, prefer months, calculations become easy. So whenever you do in a debt, transaction in debt, on purchase, what is the cost to you and what is the amount that you pay are different things. The cost to you is X interest price plus the transaction cost. Now while calculating transaction cost, the key point comes up is a brokerage. Now brokerage should be logically on cum interest price, because always in real life on the stock exchanges, whatever prices are there are always cum interest price. But for exam purpose, assume brokerage is on price given in the question. So price given in the question can be either cum interest price or it can be X interest price. So at the time of purchase, brokerage is added. At the time of sell, brokerage is deducted. But the money that goes from your bank account is cum interest price plus the transaction cost, because you have to pay the interest. The interest paid by the buyer to the seller is not a cost to the buyer because it is going to be reimbursed. It's like an input tax credit. When you sell, your effective sell value that you get is X interest minus transaction cost, minus, that is brokerage. Come interest minus transaction cost is what you are going to receive in your bank, but your effective sell value is X interest minus transaction cost. So remember, your per cost or a sell value on effective basis is always calculated with reference to X interest price. Then what are the journal entries that you pass? When you purchase an investment account debit, always X interest plus brokerage. Interest on investment account debit, accrued interest to bank account. Then whenever you receive the interest receive जब करेंगे, उसका entry लिखा नहीं इधर, but whenever you receive the interest, receive interest. So we don't ask a question, this interest is for which period. Whenever we receive the interest, we simply say bank account debit to interest on investment account. So automatically what happens is the balance in interest on investment is transferred to profit and loss account at the end of the year. That balance absolutely reflects interest for the year. So when you purchase an investment, pass an entry investment account debit, interest account debit to bank account. When you sell it, exactly ulta, bank account debit to investment to interest. But investment account is X interest minus brokerage. Profit loss is ultimately calculated using either FIFO or weighted average. That will be, if it is a profit, investment account debit to profit on sale. If it is a loss, loss on sale to investment. Remember, if your accounting date, your year ending date and year ending date should be compared with record dates for payment of interest. If they do not match, if they are not same, like your year ends on 31st March, but the company pays interest on 30 June and 31st December, then you will have a concept of interest accrued but not due. Interest accrued but not due. So we should show this interest receivable. Entry will be, this is our income at the end of the year. At end of year, your entry will be interest accrued but not due, which is nothing but outstanding interest. Interest accrued but not due, account debit to interest account. And you reverse in next year. Whenever you reverse, please remember, in a ledger account, you should not write this in. Your investment column. You should write this in interest column. Profit loss can be computed under FIFO or weighted average. In FIFO, we assume cost is out of earliest purchases. In weighted average, we have to find a balance in investment account as on the date of sale, that is just before sale. As on date of sale मतलब just before sale. तो आपके investment account का balance निकालना है before sale, and then you calculate profit loss as under sell value of investment. Sell value of investment क्या रहेगा बच्चों? X interest minus transaction cost less transaction cost. ये आपका effective sell value रहेगा. And how do you find a cost? Balance in investment account divided by total quantity into quantity sold. So this is profit loss computation under weighted average cost and nahi under weighted average cost method. So that will be profit loss. In FIFO, you have to find out each lot, each purchase, that is profit loss. When we come down to equity investment accounting, we have to learn about three special transactions. First is a dividend accounting. This dividend accounting is given partially in AS9, partially in AS13. So dividend in the books of investor is an income, but as an investor you can recognize a dividend only when right to receive the dividend is established. Right to receive the dividend is established after company has declared the dividend, not before that. So dividend, if it is related to the year prior to the purchase of shares, you have to identify dividend is relating to which year. I received dividend in the current year, but it is for the previous year, and I purchase the shares in current year. So if dividend is for the year related to prior to purchase of shares, we assume that while purchasing shares, we have paid for dividend. So in this case, we have paid for dividend at time of purchase of shares. So we have paid for dividend at the time of purchase of shares, hence we credit dividend to investment account. It is called as pre-acquisition dividend. So entry, this is governed by AS 13. Entry क्या होता है बच्चों? Bank account debit to what? Investment account. Bank account debit to investment account is a journal entry. If dividend is relating to the year, accounting year, after the date of purchase of shares. So you purchase shares in April 2020 and the dividend is for 20-21. It is post-acquisition dividend. If dividend is 1920, it is pre-acquisition dividend. But you should check, are you really eligible to receive the dividend? Eligibility to receive the dividend or not to receive dividend depends on record date. You should be shareholder as on record date. So post-acquisition dividend is credited to P&L. This is as per accounting standard 9. In the books of the company, we account for dividend in the year in which dividend is declared, not in the year to which dividend is related, year in which it is declared. So it is appropriation of profit in the books of company, reserves come down. That is dividend accounting. Bonus shares in the books of investor, no journal entry is required. We just enter the quantity. Effective cost per unit comes down in case of bonus shares because cost is spread over more number of shares. This is in accounting. In income tax law, when you learn capital gain chapter, you will learn BC Srinivasa Shetty, where the section or income tax law says cost of bonus shares acquired is 0. But whenever there is a bonus share, be careful if FIFO method is given. If FIFO method is given, bonus is allotted lot by lot. I had made purchases on 3 different dates. Then whatever bonus is given is applied respectively to each date and the cost of each investment is required to be calculated. I had dictated one such sum to you during the class in case you are able to remember. Accounting for bonus shares is different. Taxation of bonus shares is different. This leads to a creation of planning for tax. In the books of the company, bonus share is a capitalization of reserves. Reserves are converted into share capital. Bonus shares are always issued at face value. They cannot be issued at premium because bonus shares are out of reserves. Reserves can be either divisible or non-divisible as per law. We have separate chapter on that. Investment property is an investment in a real estate. So an investment property is an investment in the land and building that are not intended to be occupied substantially for use by or in the operations of the business or investing enterprise. हम इनको use नहीं करने वाले. They are held for renting it out. It is not held for use. It is held for renting or held for sell, not held for use. Assets which are held for use are your non-current assets or current assets, maybe, depends. And investment property is accounted as per cost model prescribed in accounting standard number 10, plant, property and equipment, that is historical cost. Cost model is a historical cost. The cost of any shares in a cooperative society or a company, the holding of which is directly related to the right to hold investment property, is added to the carrying amount of investment property. Whenever you purchase a shop or a flat or a building, you have to also purchase a shares of cooperative society in which that flat is situated. So you have to purchase shares of that cooperative society. So you pay for a flat plus you pay for shares, a nominal amount. That nominal amount should also be added to arrive at a cost of investment property. Another issue in case of equity shares is a right issue. So Right issue is whenever a existing company comes up with a new issue of shares, it has to give first offer to existing shareholders. If existing shareholders are not willing to subscribe, then only it shall go to the outsider. This is technically known as right of preemption available to existing shareholders. So there is a record date, and on a record date, company comes up with the certain ratio. So if I say right issue is in the ratio of 2:3, it means 2 rights for every 3 shares held. For every 3 shares held. Now let us say particular investor had 3,000 shares, so he will have 2,000 rights. Now it is not necessary that he has to exercise the right. Voting is your right. You may exercise, you may not. Like that, 2,000 rights you have got. Either you can exercise, or you can renunciate, or you can do combination of these, or you can do nothing. So primarily 3 options: exercise the right, sell the right, or do nothing, or combination of these 3. It is all up to you. So in the books of investor, if he does nothing, he neither subscribes nor he renunciates the right, no journal entry is required. But if you subscribe to the right issue, it is as good as new purchase of shares. The entry will be investment account debit to bank account. Bachcho, when you purchase shares, you pass investment to bank only. If you receive dividend for the year prior to the date of purchase, then bank account debit to investment account. It is not like a debentures. Debentures में हम जब purchase करते हैं, तभी हम price को कम interest price को 2 टुकड़ों में बांटते हैं. कम interest price debentures के केस में क्या किया था मैंने? It was true price, which was called as the ex interest price, and then we had talked about accrued interest. In case of equity shares, there is no such bifurcation done. We pass entry investment account debit to bank account if we receive the dividend for the year prior to the date of purchase of shares. We assume that when we purchase shares, we have already paid for dividend, and then dividend is credited to investment account. If you renunciate the rights, then generally right proceeds are credited to profit and loss account. Whenever you sell a right, renunciate right matlab it is sell of right. I did not say sell of shares. Right is different, shares are different. Right leads to the shares. So you are selling the right. So it is treated as your revenue receipt. It is credited to profit and loss account. But there is some exception. Very, very rare situation that exception comes up. So whenever you prepare a investment account, you have a column like date, particulars, number or face value, amount. Amount is investment column. And then you have income column. Income column represents dividend as well as proceeds of sale of right. You should write a note below that the column is income column. Hence, proceeds of sale of a right are credited to that income column. Or if you write only dividend column, these proceeds go to profit and loss account. So what are your revenue receipts? Your revenue receipts are dividend. Which dividend is credited to P&L? Revenue receipts are credited to P&L. So revenue receipts are post-acquisition dividend, and revenue receipts include sell of right. Sell of a right. So in the books of the buyer who buys the right, the amount paid to the company as well as amount paid to the seller of right, both of them put together is his cost. So he pays something to the company. What you pay to the company is known as exercise price. Exercise price, the price at which you can buy the shares, and amount paid to the seller. So as I told you, generally the proceeds from sale of a right are credited to profit and loss account. There does exist an exception. Exception is sale proceeds of right. This is first amount. Or decline in the value of shares. This is second amount. Whichever of the two is low. Sale of right amount aa gaya. Decline in the value of investment. Decline in the value of investment from which date? Date of purchase of shares till the date of right. Normally, as a result of right, value of shares does come down because there is some bonus element in the right issue. Right issue generally is at a lower price than the fair price of the shares. So decline in the value of shares or sale proceeds, whichever is lesser, whichever of the two is lesser. So you have to find decline and sale value, lower of the two. But if there is no decline, this exception does not apply. So whichever is lesser is credited to investment account if additional conditions are fulfilled. Shares were purchased on कम राइट बेसिस, जिन शेयर्स पे आपको राइट मिला है वो शेयर्स आपने कम राइट पे खरीदे थे, the rights have been sold, that is why you have sale proceeds of right, and there is a decline in the value of shares. Now normally when the shares become X right, examiner should give you decline in the value, or he should give you market value at that time. Our nonsensical examiners, I am proud to say that, do not give the decline in the value of investment. They just say shares were purchased on come right basis. So for exam purpose, if shares on which rights have been received were purchased on come right basis, come right matlab after announcement of right issue. If the shares on which rights are received have been purchased on come right basis, then credit proceeds of sale of right, credit proceeds of sale of right to investment account, even though question is silent about decline in the value. Question is silent about decline in value of investment. Logically you should compare proceeds from sale of a right with decline in the value of investment, but अगर नहीं दिया तो कुछ नहीं, चुप बैठो और क्रेडिट कर लो. Thank you.